so Lucas, we are in one of our latest flipped properties. This is in an A-class area. We bought it for a decent price.
Yeah.
We rehabbed it and it sat on the market, and we're gonna lose $75,000 on this house. So what the happened?
Yeah, I'm kind of trying to figure that out myself, right? But we'll take you guys back and we'll show you what we did wrong and the creative solutions that we're coming up with to get ourselves out of this hole.
Let's go. Missed it. All right, so Lucas, I'm gonna lean on you a lot in this video, so I hope you're prepared. I'm gonna body up a little bit because I don't know very much about our flipping company as far as the day-to-day goes. So you and I own Faster House, which is our flipping company. You run that. We both own Faster Freedom, and I run that. So we've kind of divided and conquered. This is not the best example for Faster House because it's a good company, but let's talk about this property and how we found it and how we bought it and when we bought it and all that.
Yeah, there's a lot of times we make 50 grand on a flip, 100 grand on a flip. And we actually did that on a house just down the street, and we did a video to that house.
Check out this video.
Up there, right? All right, so check out that one where we did great in the same subdivision, literally a half mile down the road, right? But it all starts with how you buy the house, okay? And we purchased this house almost a year ago. We got it under contract now. And in that time frame, there's been quite the market shift, would you say?
Interest rates have over doubled.
Over doubled. We used our normal rehab buying formula for this that we used a year ago, and that was ARV times 80% minus the estimated rehab costs. Okay. So we thought this house was gonna be worth $400,000 times 80%, which I think is $320, minus $60,000 estimated rehab costs, which would give us a $260 purchase price.
That's what we bought it for?
And that's what we bought it for. So we closed on it in March, and as we were working through the rehab, the market started to shift a little bit, which compressed our numbers, and a lot more happened than just that. So, you got any tips for these guys to kind of keep them safe if the market is adjusting?
Yeah, I would say as the market adjusts, the best thing to do would be to adjust that buy formula, buy it at 70%, 75%, that would have saved us 20, 30 grand. But also be super conservative in your ARV. If you think it's worth 400 right now, maybe run it at 390. And if you think it's a $60,000 rehab budget, maybe run it at 70,000 and then multiply it by 70, 75%. So just being more conservative in times like these is super important because you can still make a lot of money, and we're still making a lot of money on a lot of properties that we buy properly, but things can and usually do go wrong. So being more conservative right now is important.
Great tip.
All right, so we're gonna walk through all the places we screwed up. That's not fun to do, but let's do it. We already kind of talked a little bit about the buy price. We bought it too high for the market or the imminent market shift that we saw coming a little bit, but we didn't know it was gonna be that drastic. And so we started off behind the ball, 8 ball. Is that the same? We start behind the 8 ball?
That sounds right.
Okay, is that right? Okay, we start off behind the 8 ball because we spent a little too much. Now, the rehab was a $60,000 budget. Can you walk me through how the rehab went, and then we'll get into several things like this that you can see up here that are issues with it.
Yeah, so we had a $60,000 budget. We closed on this middle of March. When we closed on what Sam was talking about, we started to see this market shift. So we knew we had to finish this house quicker than our normal houses. And the fact that we rushed it, we sacrificed a lot of quality. So normally this would be about a 60-day rehab for us, give or take. So finish it in mid-May, and that's what we did. But in order to finish it that quickly, we sacrificed a lot of quality, as you can see, and we'll go around and point some other stuff out. That quality was sacrificed for many reasons. We didn't do enough site visits. We got to get to these houses twice a week minimum, so make sure this house is staying on quality, on time, and on budget. So we didn't do that, right? And we also went through a personnel change during this house. We changed contractors, we changed project managers, so a lot of moving parts that we ended up spending about $75,000 on this initial rehab.
Oh, on the initial rehab, that's the key word. So a lot went wrong, and one thing going wrong, like buying a little bit high, or doing not the best rehab. One or two things going wrong, usually not the end of the world, but stacked and stacked and stacked on stacked.
With a market shift in between, that's why we would lose $75,000 if we sold it.
Spoiler alert. A couple things we're going to point out as you'll see through the B-roll walking through, but things like this, the basement foundation, as you'll see, has some issues. Now it's been repaired, and the house isn't going to fall in on itself, but this is the front door behind me. The first thing you see when you walk in the house is this. That's going to scare a lot of potential buyers, and the market's not everybody has to move, you know, there's not enough houses out there, people were buying sight unseen. That's not happening anymore. People have more choices, so the higher quality products are the ones that's selling, and this isn't the super highest quality product. So things like that are issues. So now let's go into another room, Lucas, and let's talk about why that initial $75,000 budget is the initial budget. What does that even mean?
Ooh. So we're about 2 months after we purchased this house and we're getting ready to finish up the rehab. We've already bought it a little high. We've already spent a little more on the rehab than our initial budget. So now what do? We gotta list this house to sell, right? Wrong. We listed it at what we thought we could sell it for 3 months ago, but that's not the case anymore with this changing market. So instead of listing at 380, let's say, we listed at 400, way too high, all right? That's not what the market is right now. So make sure you list it to sell in this market. We started getting feedback as showing started coming in that the quality of the rehab wasn't up to par. So that $75,000 ballooned to $100,000 plus after we started going in and readdressing issues that we didn't see on the initial rehab that potential buyers started to see. We have almost 10 price drops in this house and we still haven't sold it almost a year later, and those holding costs start to add up. I'll kick it over to Sam to talk about those.
I've been working on my stretching a lot lately. I used to not be able to sit like this. Now I can, so we're gonna take advantage of it as I am kind of trying to woosah my way out of this video and all this money we're potentially gonna lose. Lucas just talked a little bit about the issues we had with the rehab and how it went over budget, and alluded that our holding costs are out of control, or they do get out of control when you hold the property for a long time. So let's just do some simple math. Let's say you're borrowing from a hard money lender or a private money lender at 12%. That's pretty standard. And let's say we just stuck to our original numbers, the $260,000 purchase price and the $60,000 rehab. So that $320,000 of finance costs in this deal at 12% for a whole year is almost $40,000. So we had some other different funding sources involved in there, so that's not our exact math, but 12% is a pretty good rate. I mean, some people charge even more. And if we had this out for 3 or 4 months, 12% is not really a big deal. But when you hold it for 12 months, it adds up to over $40,000, or it adds up to, I guess, almost $40,000, depending on exactly how it was funded. So that was a big reason why we're gonna lose money on this deal if we sell it. We're gonna play a game. It's a segment called All the Issues with This House. It's something I just made up. So we're gonna do a quick clip of all the major issues, or I guess minor issues, that we see walking through the house. The first, this ginormous crack up here because the foundation is shifting. You can see there's some screw holes here in the door. And then down here, I think this piece of tape is holding the panel onto the door.
We have this brand new carpet that our cameraman just stepped on a nail. Why is that there? I don't know. But we also have mismatched paint and fingerprints on the ceiling.
Here's a little piece of the old backsplash, and there's a gap here in this finished work. Actually, the finished work over here is not the best either. The cabinets were painted. They were in pretty good shape, but they're painted. There's just drip marks under here. It just doesn't look very good. Then under here, you can see this is at an angle. The grout is, there's a gap here, and then the grout actually changes colors here, and there's no trim piece here. So this kitchen at glance looks pretty good, but it's not.
We have this type of tile in both bathrooms. At first glance, it looks pretty good, but it's got these brown tones that just really doesn't go with the rest of the house. So design is super key, especially nowadays with really picky buyers. Also, these bathrooms had a recessed medicine cabinet. So for us to be able to fix that, we had to do some drywall patchwork, and the patchwork isn't great, and we picked a mirror that didn't cover up the old recessed spot.
As you can see, there's paint on the actual outlet. It's the old paint color from the homeowner. There's just a lot of lack of finished detail in this house. So before we recap everything and go over the numbers and go over our game plan moving forward to not lose $75,000 on this deal, I want to point out this foundation. Now, this is all fixed. Everything is fixed with warranties. The house isn't going to fall over, but this is something you consider when you're looking to flip a house or even have a rental property. This will scare a lot of people. Knowing what I know now and knowing the lifetime warranties and everything, this is fine. Nothing's bad's going to happen. You saw the house shifts a little bit in the winter and the summer. There's a few cracks up there. The house is very, very safe, but this in itself with the cracks and everything is going to scare a lot of potential buyers away. They're going to walk down here, see this, and say nope and leave. So just when you're listing a property or looking at a property and whatever you're doing, look through the eyes of the general public that's going to be buying the house. Don't ever buy a property that you think this one little niche type buyer is going to love this type of property. That is not a way to invest, especially in today's market. So look for simple. Weird or issues are not good in markets like we're in right now and going to be in for the next couple of years. So just look for simple, clean, and safe. All right, Lucas, I promised people in the other room that we were going to tell them how we're not going to lose $75,000. So the power of real estate is the potential flexibility and control you have over that investment, unlike a lot of other investments. So talk about what we're gonna do.
Yes, we own a lot of rental properties, right? So we know how to rent out properties and cash flow. And a lot of times houses in this price point in our area don't cash flow, but we have an interest-only loan on this house for the next 9 months. So we're gonna rent this bad boy out for $2,500 and make about $150 a month over the course of the next 9 months. Once that loan converts from interest only to starting paying down some principal, then we'll lower our basis in this house. And when the tenant moves out in 1, 2, 3 years, we'll resell it at $380 and hopefully break even or make a few bucks instead of losing 75 grand like we would have with our last offer.
So we're banking on the market like it's gonna do. It's gonna kind of rebound and bounce back up. We're banking on having somebody else pay the mortgage down a little bit and just taking care of issues through cash flow and have somebody live in here and hopefully, kind of take good care of it and take care of any little minor issues. And then at that point, best case scenario, we break even. Hopefully, maybe we'll just lose 20 or 30, 40 grand, something like that, not as much.
Because I truly believe after all these issues that we're about to point out or have pointed out to you guys so far, that this house is worth $380,000, $400,000. But after all of our price drops, after over 9 months on the market, got some stank on it, so people are scared off, and rightfully so. So we're gonna pull it off the market for a year, 2, 3, fix these issues and relist when, and hopefully that stank is gone and we resell it for asking. But this particular house is in a great neighborhood that's just gonna appreciate over time. So we're gonna hold on to this one so we don't lose 75 grand today in hopes of the asset appreciating over time and maybe making money, a little bit of money in the future.
Awesome. Well, learn our lesson on this one. We're going to move on, keep going, keep buying. Hopefully, next time we do a video, we're talking about a property we made money on.
That would be sweet.
All right, see you on the next one.